Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, so super excited for my new guest on The Investor. We've got Bob Lang, who is the founder and chief options analyst of Explosive Options. It's an options trading and educational platform that he launched in 2011. He's a veteran technical analyst, options trader, and market educator known for delivering actionable trade ideas based on technical analysis and real-time market conditions. He is a veteran in the industry. You know, he's managed in the past institutional portfolios, pension funds, hedge fund strategies. He's previously ran Aztec Capital, which is a hedge fund focused on equity and options markets. And over the course of his career, he worked across asset management, portfolio strategy, and derivatives trading. And a little bit about Explosive Options. At Explosive Options, Lang provides subscribers with trading strategies, market commentary, options-focused education designed to help investors generate income and navigate volatile markets. He's also a contributing market commentator and has been a long-time contributor to financial media outlets where he covers mostly technical analysis, option strategy, and market structure. So, Lang, really excited to have you on the platform. It seems like you've just built an amazing community, but also just coming in, you have that institutional background to back it up. So really excited to kind of have some conversations. Look, we started almost like a pseudo podcast and started kind of going back and forth. And I'm like, man, we got to get this recorded and get it on the pod. So before we start with anything, I feel like it's important, to understand who Bob Lang is, going a little deeper on, look, where you grew up, what were your earlier influences when you were maybe a teenager going up to high school, and, what did you choose to major in college, and how were some of those things critical in forming who Bob was, and, obviously your first, steps of your career at the institutional level. So I think this is a great opportunity to kind of go deeper on a lot of that and have some fun conversations around it.
Well, great, Joel. Thank you for having me. I really appreciate the time and the interest as well too. So if I had to go back and to the beginning of where I really had some interest in the stock market, it's really kind of funny story. My dad was a stockbroker back in the 60s and early mid 70s. Probably one of the worst times to be a broker in the stock market. The markets were terrible back then. Sure. Probably mid 60s to about 1975. And I remember the days that my older brother and I, my dad would just say, okay, get in the car. We're going to go pick up the Barrons. An issue of Barrons would come out about 4:00 in the afternoon in Southern California.
The Sunday edition, right?
That's right. He had to get. He had to be like the first one out there to get. To go to the newspaper. That little box where you threw like 6 quarters in and then lifted it up I always loved to jump out of the car and grab the Barrons for my dad, and he tried to start explaining to me a little bit of what it was all about. I probably wasn't more than 10, 11 years old, and I had the interest of, I had the attention span of a gnat back then, so I probably would have only listened for about 5 minutes, and then I got bored and went and did my own thing. But that's where he really, he started doing that. We did that every single Sunday, sure, and going to get the Barrons. And
so who would read it? I guess would you guys all read it independently and share insights?
Well, it was my dad really mostly reading it. My mom had no interest in it, and he would start trying to read it to us and telling us what this thing was all about. And he'd tell us about the Alan Abelson column. Oh, this is a really important column. This guy really knows a lot of stuff, and he was of course the editor of Barron's. And eventually it caught on for some interest here because I wanted it. I love my dad, and he's still around today, thank goodness, thank God. But he. I wanted to emulate my dad. I wanted to, be, do things that he did and that he found an interest in, and perhaps would bit easier for me to step in there with a little bit of assistance from him. But that was really kind of where it first started. And then when I got into junior high school, we had a contest of, in middle school, learning about the stock market. And so I figured, by then I have everybody else beat, where these 13, 14-year-olds, there's no way they're gonna beat me, because my dad taught me through lightly in a couple of years about the stock market and how to pick stocks. So our job was to pick a stock and see it through to the end of the year, and we had a contest to see who picked the best one. And my dad said, why don't we pick Halliburton? This is probably back in 1979 or 1980. Okay, we picked Halliburton, and actually finished second in the class. And not first, but second. But that really got the juices flowing, because every single day I have to look in the paper to see how did Halliburton do for 6 months, and just to see how well my stock was doing. So, that was really where where it first started in my interest in the stock market, and finding something that I can really tangible to my hand on and to pay attention to.
And what were things that your dad was talking about? What were some things that your dad mentioned, in those sessions? I guess, how long would he read the magazine? So he would just kind of digest the magazine and then just kind of give you guys an overview and then just kind of stimulate the discussion. Did he ever push you to, and your siblings, to kind of go through the ritual of reading it and kind of sharing your insights? And did that evolve as you got older?
Absolutely. And he would get every couple of weeks get an issue of the Daily Graphs that would come out, and because my dad loved to chart way back then, and he did work in the same office with William O'Neill, who famously started Investor Biz Daily and William O'Neill Company back in the day, and he loved charting. He loved technicals, and would show me how to chart these things. He would actually get a pencil or a pen out with a ruler and show me how to chart on these daily graphs, and that was really super helpful in learning about patterns and so forth. But as far as the Barron's is concerned, he would read stuff out of there and share it with us, and how important it was to be aware of what's happening in current events, and what stocks are important to buy. He'd also talk about the investment landscape and risk management and diversification, all these sort of principles that foundational principles that we're supposed to know, we're supposed to understand to be successful investors and traders. So so all those things were certainly paramount and discussed at length with my dad, with my family. My brother went a different path. He decided not to do anything in financial markets, although he does dabble a little bit. But for me, it was really, hey, this is really what I want to do.
Sure. No, that's amazing. And then how did that cascade into your professional career? So you did that as you were growing up, and then what did you pursue? What was going on in your mind as maybe a rebellious or non-rebellious teenager, and kind of getting into, thinking about college?
Well, right when I got into, I transferred from Santa Monica College to San Diego State back in 1987. It was a very interesting time period. And another event happened that really was truly fascinating to me. I had some money in the markets, about $10,000 worth of stocks. I wasn't trading options back then, but again, late 80s. And I'm in college, my first semester at San Diego State, and we had an event happen in October of 1987. I'm sure you know your history, that the market crashed back in October of 87, and it was fascinating to watch what was going on. I was losing money because I had stocks, but so were a lot of other people, not my colleagues or students that were near me, but other people. And I was watching what was going on in TV, Joel, and seeing the rampant fear, and it was palpitating, and the people who were scared and nervous and worried about losing their money, and again, it was just from a psychological standpoint, it was fascinating, because I thought, well, it's just going to bounce back. Why are you so scared? Why not just jump in there and start buying more stocks?
Mm-hmm.
And literally in 2 weeks, 80% of the losses were recovered on the Dow and on the S&P 500. So, again, this was another event that a life-changing event for me in watching what was going on in the markets, because I realized, every single day, week, month, and year, the market is giving you opportunities to take advantage of some unfortunate souls' poor judgment, right? Selling when you shouldn't be. So a lot of people were selling way back then in 1987 because maybe they got margin calls or something like that, or maybe they were just scared and they thought, oh my gosh, I've got money, I don't want to lose it all. It was a very similar feeling from back in the late 1920s, right before the market crashed back then. But if you had a steady hand back in 1987 and 1988, we did go into recession after that. But if you had a steady hand and just waited for prices to recover and just took a deep breath and waited for that moment, you actually you not only came out at least even, but you probably came out real well, made money.
Yeah, no, I totally agree. And I mean, for me, it's been really interesting to look at different ways that people allocate their capital. I mean, there's pros and cons with everything, right? So with venture, you're hoping that you get a, 5,000x return, but you may not know if you're going to get that type of return until maybe 10 years. With private equity, there's a lower multiple, but, obviously you're investing, if you're doing buyout, you're more into a tangible business where you can actually see those results. And then the issue with both of those, if you're in a fund structure or if you're in a direct deal, is that you can't cash out. And that's what for me, I think what's interesting is kind of investing or looking at the hedge fund structures, because they're more liquid. Some of them allow you a redemption within a quarter. Some of them allow you a couple days where you can, cash out if you need to. I think the good managers that are doing hedge fund strategies, or if you're doing like some type of prop trading desk, the good platforms are the ones where your performance is doing really well, you're compounding capital, and the LPs don't even have a reason to pull out, because it's doing better just sitting in that account and compounding capital. So wanted to and then obviously there's real estate, right? People are investing in real estate. I think the difficult thing that people don't realize with real estate is if you want to sell, you don't know when that instance could happen. And then if you do sell, there's obviously a taxable event. And I think that you are kind of taking an approach where you could have a private equity strategy with real estate, where you're buying the property or the complex, and you're adding value to it, and it does appreciate and there's cash flow. So you could run it, essentially as a real estate private equity strategy, but you're an owner operator. But you're always in the game, right? Even if you sell that property or do like a 1031 exchange, you're back in the game, right? You're not really retired yet. So wanted to kind of hear your thoughts on just kind of all the vehicles and how people think about that. Maybe some of the people in your community, some people are just all in on active trading, and then there's other people that kind of have a couple different strategies. They're a multi-asset strategy approach. And, I'm assuming, some of the pension funds and, institutional investors that you worked for, they probably have that multi-asset approach, I'm assuming, but would love more color from your perspective on that.
Yeah, as far as private equity and ventures is concerned, you as an investor, and I invested in these when I was making pension money for Sunkist back in the late 90s. A great time to be bullish. The markets were just going straight up every single day, until they ran into a bulldozer in 2000. But we had private equity investments too, and the philosophy there in those investments is you've got to take a long-term approach to returns. You're going to probably going to get good returns, because look, let's face it, Joel. Private equity is, along with small business, but private equity companies is the lifeblood of the growth in the economy. And I will tell you that it is these companies that are young, smart, innovative, and they bring people out from college. They bring people out from, whether they're Stanford or MIT or Harvard or wherever they're from, and they have these unbelievable great ideas, but they just don't have the wherewithal to do it without any funding. And they seek people like you or others in the business, they pitch an idea and say, look, this is, we may not change the world here, but we're going to change part of it, and we really want to bring it out. We need some funding. We need some funding, and we need some patience. Can you stay with us long enough to make it worth our while? I mean, I'm sure years ago, Joel, there were people who invested early on in Anthropic and OpenAI, right? And without the idea of the success that they're having today, obviously it was just a dream for Sam Altman and the other guys over at Anthropic. It was a dream that they were going to get there. And I know with the backing of somebody like Jensen Huang, who's been a believer in AI for years and years, even the guys at Google, it was just a matter of time before it came together. But if you were on board early with a concept like that, you're gonna make a big amount of money, right?
Yeah, no, I totally agree. And I think what's really interesting is the convergence of public markets and private markets. There's the ability to invest in Anthropic before it's public. You can still invest in SpaceX before it's public too. And obviously you're not going to get the same outsized return, but you could buy shares at a certain price for a certain number of shares, very similar that you do with the stock market. The only thing is it's not as technically, the ability to technically offload the shares is not as easy as just hitting a buy or sell button. You obviously have to work usually a lot of times with the broker and kind of find a buyer, and there's a matchmaking process. But I think there's opportunity. There have been some platforms that have attempted to do that. Obviously there's some side effects that I'm not going to mention on here, but there's some side effects with that when you have private market data and you're trying to kind of sell to investors. There could be some issues, but so tell me a little, and then kind of you walk me through kind of the jump off point from high school to college and kind of what you majored in and how that kind of landed into your first career in institutional investing.
So I was a finance major at San Diego State, and was a traveling salesman for a cookie company. You've probably heard of Keebler cookies. They were bought by Kellogg some years ago, and part of their.
So what were you selling on behalf of Keebler? Was it like enterprise?
Cookies, crackers, and chips.
So who are you selling? Like, who are you? Oh, you're selling it to grocery stores, like to put them on the shelves.
Yeah. That's right. And
okay,
that was a really first, big job after college, and I was able to have some pretty flexible hours, so I managed to get my master's degree from the University of Redlands while I was working there. And once I got that master's degree, this is a funny story about. So once I got that, back in 1996, I decided to take a look at some ads in the paper for a new job. So I figured, okay, well, I don't really need a master's degree to do the job. I've been here for 3 years, and it's time to move on and try to find something a little bit closer to a career for what I wanted to do. And so I used to have things in the LA Times and probably other newspapers called the tombstone ads. They look like a big tombstone, and on the page, a huge printed ad. So I answered one for Sunkist growers. They're looking for a investments pensions manager. So completely unqualified. I knew I wasn't qualified, but I thought, let me just give it a shot. So I called up, and they booked an interview for me, and I met with the trainer, and I was really rather nervous going in there. So I walk into his office, let into his office, and he's not there, and I'm looking around his office. I'm like, is there anything here I can identify with? I see he's got a golf trophy, he's got UCLA stuff. I'm like, I'm a sports guy. I thought, oh, this is good. I can, if this interview is going nowhere, I can just bring up some sports stuff and we can start talking. So he comes in there. He comes and sits down with me, Joel, and we start talking a little bit about a little bit about the job. But then the Lakers were playing the Bulls in the NBA Finals. It was around that time, and I said, "Well, what did you think about that?" We started talking about that, and we started talking about golf, and we talked about other stuff, and we just became, friendly for 45 minutes, and we talked about the job for 10. It was less than an hour interview, and we didn't barely talk about the job. So I left thinking, okay, well, that was a nice guy. We had a nice conversation. I'm not going to get the job. And so, I'll just chalk it up as some experience. He called me back 4 days later, offered me the job, said, "Here, Bob, we want you to be the investment pension manager." And I was literally, I fell off my bed thinking when I took this call, I'm like, "You got to be kidding me. Really, you're me?" So I got the job. I was an investments and pension manager for 3.5 years. We had a great time. We had a great years, 97, 98, 99 through the Russian ruble crisis, through the Asian crisis, and also through long-term capital management happened during the 1998. So there were a lot of crises that happened during the, we did really well. I started with a pension, Joel, was about $220 million. When I left, it was about $340 million, and that's after withdrawals from the pension fund. So we had a really great time. We had a really well diversified portfolio. We had some private equity, venture capital. We had some real estate, along with different long and short managers, different sectors, small cap, large caps, mid cap, that sort of thing, and European stocks. So we have very well diversified portfolio, but we ended up having a good couple of years over there, and then I left in 1999.
Well, look, I want to go deeper on the pension fund and what you learned, but funny enough, I want to learn about what you learned selling Keebler products to grocery stores. Like, what were some of the, I'll tell you this, like some of the formative skill sets that I've had in sales, and you're going to laugh, but like I worked at the mall at like a jewelry store. And it was essentially like a sales. I mean, I was just manning the booth, but still you have to kind of learn how to work with people and, maybe upsell. And, I got a commission, but like, that was like my first sales job. And there was just a lot of basic things in terms of just like, hey, connecting with someone, right? So what did you learn the most from selling Keebler products to grocery stores?
Yeah. So it was just more the relationships that you build with people, and the guard back in 1992, still reaches out to me from time to time. He lives in Laguna and Laguna Beach, California. And it were 30 years later, he still sometimes reaches out to me and sees, "How you doing, Bob? How everything's going? How's your family?" That sort of thing. And, you build relationships with people in sales if you want to have a successful career in sales. I think, Joel, we're all salesmen to a certain extent, right? I mean, we're all trying to sell ourselves or sell something. So, I think that experience, me become better at, building relationships, communicating with people, following through, getting orders done. If something's not right, fixing it, sort of thing. But sort of self-management principles that I was able to learn on the job.
Yeah, no, absolutely. And then walk me through some of the things that you've learned as an allocator, kind of deploying capital for pensions. It sounds like you've invested in all different types of strategies. And what are some things that you've observed have changed since when you were deploying capital?
Well, I'll to when I was at Sunkist, the investment portfolio.
And that's the orange company, right? Is that the orange juice company? So their pension fund?
Yeah, or lemons and oranges. Well, it's mostly fresh fruit, Joel, but they also have juice and so forth. Sunkist was just a marketing company. Nobody owned them other than the growers, and it was just a marketing company. It's been around for 140 years or something like that. The brand, it's a very high quality brand. It's one of the most identifiable out there. But it was an old company, a pension fund that they were required to have managed with the assets and keep in line with the with distributions that were to be done for all the retirees. So my job for the growers was to try and build the pension fund up as much so they didn't have to make contributions, and we did that every single year, which is they loved me for that. because they didn't have to pour money out of their pockets to fund the pension, as they were obligated to do. So we had a diversified portfolio, but when I first got started, Joel, with that, the portfolio needed a lot of reworking and structure, in structure and in size of pension investments in certain areas and groups. So, I had to go around and start firing managers because they weren't doing a good job, or else we needed to, again, deploy that money elsewhere in certain areas. And, I would fly around the country, going to Chicago, Philadelphia, New York, obviously Boston, other places as well, to Tennessee, Texas, and finding managers who could, good high quality, hungry managers who would fit our criteria for investments. And I was looking at the hungry guys who needed to do everything they could to get a good return and to earn the money I was getting. We're dropping, $5, 10, 15, $20 million on all these managers, and we really had to be careful about who we went with. Had a really strict criteria. Again, I met with a lot of really talented people, but I had to have a high bar for them to get our capital in order for us to get a good, safe return on our investments. And again, we were in a lot of the areas that you specialize in venture and private equity. We got some really good, strong returns in that area, real estate as well. So we had money with this company called REEF, RREF. I'm sure you know who they are,
Mm-hmm.
San Francisco. And the diversification was really the focal point of success of the pension fund, and concentrating it in certain areas that we thought were going to do real well. That was back in the time during .coms, when a lot of called it the dot bombs, the .coms, where a lot of companies were getting a lot of capital from ventures and so forth, but they had no prospects of making money into the future. Sure. Zero. And okay. They were taking money from venture capital and not they had no path to making money. So it was a matter of how long you last before the music stopped.
Yeah, that makes sense. And then tell me what happened. I guess what was the next stage after that? After you left the institutional pension fund?
So I left there and I started my own hedge fund in January 2000. My timing could not have been worse. We started coming back down. I was pretty bullish going into 2000, and after the whole Y2K thing happened, and it was turned out to being a false alarm. A lot of liquidity arrived out, and a lot of these stock companies that were had prospects, that even prospects for making money or not even making money, they all went by the wayside and went to zero. Several names did survive, obviously, like an NVIDIA or an Amazon, mm-hmm. but a lot of these other companies, they went away. So I started dabbling in options trading. Didn't really have a lot of experience doing it, but I tried it, and my dad helped me learn how to trade options a little bit here and there. But it really took, Joel, for me to learn. I learned from the School of Stocks on this one, and there was no real educator out there, any mentor of mine, up until about 4 years later, that got me going, and really helping me learn how to do it. But I will tell you that the greatest experiences that I've ever had were real experiences of winning and losing in options trading.
Sure. What advice would you have for new hedge fund managers? Developing a strategy, obviously building a pipeline of LPs, and then obviously like following best practices for execution.
So, as a fund manager, basically a fund of funds manager, I suspect that the ideal policy that most would have, Joel, would be take a look at which companies deliver the best Sharpe ratio, and the Sharpe ratios mm-hmm. were really important for me as well, and they should be very important. That's basically, for all those folks out there, Sharpe ratio is a risk-adjusted return on your investment. And mm-hmm. So the you know it's all about the diversification, and so the managing your risk and diversification is important for a manager these days, because you just don't know what's going to happen. It's, especially in these times, we have we have a president who's very unpredictable, and was very unpredictable back in his first term as well too. It's very difficult to be on top of things, and trying to trade, invest in the macro is hugely challenging. Right? And if your time horizon is long, like yours or usually mine, then you shouldn't really have to worry about those things. However, it does make one a little bit uneasy when things aren't going in your favor, and you just don't see any light at the end of the tunnel for successful investment and successful trade.
Yeah, no, absolutely. No, that's really great advice. I mean, so walk me through kind of what happened after that. So you built the hedge fund, you deployed some capital, and then, how did that go? And then tell me what happened after that.
Well, I mean, in 2000, we had a good year the first year. We got off to a rough start. In 2000, we had a good year, and we actually finished up 9%, and markets were down. And I sent a letter out to all of my investors telling them, look, you know what? It looks like we're heading into a bear market in 2001. I'm going to be doing some shorting, and we're going to be, I just not really comfortable with this, and we have high levels of cash. And would you believe I got a lot of responses, Joel, said, well, shorting stocks, that's really not un-American, isn't it? And I'm like, what are you talking about? So it was just the first level response here, Joel. And I thought, you know what? I think it's better for me to send your money back. So a lot of people, I sent their money back, and the people, and I ended up, so I just didn't have enough capital to stay in business, Joel. And so I set my timeline to close up the fund in September of 2001, which actually, ironically, right before 9/11 happened. And so anybody who stayed with me, I doubled their money, because I doubled my money back in the summer of 2001. The markets were down a lot, May, June, July, leading into 9/11.
You doubled it through shorting? You doubled it through the shorting strategy? Okay.
Shorting, I was stock. It was just incredible.
I mean, doubling the money doesn't sound too un-American to me. So
I know. Listen, you know what? That you're short. Money shorting and or going long, it's all the same to me. It all looks the same to me, doesn't?
I don't know if you watch. I don't know if you're a follower of the. I don't know if you're a fan of the show Industry, but like the latest season, there's a PM. And it's really great. I mean, I think even for new fund managers, they should watch that show, because it's she's meeting a bunch of LPs, and that woman Harper, she left kind of the bigger bulge bracket bank, and she went out and launched. I mean, she set up an activist short only fund, and what they do is they find bad actors, and they find the alpha. I think she had like 1 or 2 anchor LPs, but it's really interesting to kind of just see how you can take a pool of capital and then just deploy it across a different type of strategy, right? So like whatever your expertise is, whether it's options, whether it's shorting, as long as you're generating some alpha with that expertise that you have, then at the end of the day, it's like the numbers can't lie.
Well, one thing I learned about just while I was running the hedge fund, I had some personal money that I had made a good chunk of money back in the late 90s, and again, I didn't have the knowledge of managing risk back then that I do now. That was 25, 26 years ago. I'm a much better risk manager today, but if I had those skills, the skill set back then, I probably would have done a lot better. But there was a moment, Joel, that I wanted to share with you. It was back in July of 2001. So I had a lot of shares of this company. I'm not sure if you remember a name called Broadvision. Does that sound familiar?
Sounds familiar. Yeah, it sounds familiar. Okay.
It was a Bay Area company. I had a lot of shares of that company, and I didn't have any short calls against it. I didn't have any protection. I had a large amount of shares. And so it was a Friday afternoon. It was in July, and I was living in Southern California back at the time, and I was I was trading the stock. I was just holding on to it, I get up in the morning, Joel, at 5:30. The market's opening up at 6:30, and I'm looking at the ticker on CNBC, and there's Broad Vision down $10. I've got 7,000 shares of the stock.
Wow.
Unprotected, and I'm like, I'm sweating. I'm like, what the hell's going on? And I'm scouring for news. What happened? Right? Why is it all of a sudden going down? I mean, I couldn't believe it. So I'm looking around, and maybe I think they lost a contract or something like that at American Airlines. It just got worse all day long. Here's a Friday. I'm ready to go to Las Vegas for the week to meet my parents, and the stock ends up down like 15, and I'm like, oh, I got to get rid of it. So I cut the stock. Obviously the number, I lost $100,000 on this stock. Again, no protection at all. And I was like, I get on the plane, I get off the plane, and I'm literally ghost white, right? I'm so upset. And my mom says, like, what's wrong? Looks something wrong with you? But what happened today? Like, well, Mom, I just lost $100,000 on the stock today. But that bombed. No, well, don't worry about it. Let's just have a good time in Las Vegas. It was the worst weekend of my life. I could not have a good time. I couldn't relax, and so that was the one trade, the one experience that kept me from overexposing myself to risk in a bad way. Because I mean, I had zero protection on that. So I mean, if anybody who more recently, there was a company called Avis, which symbol is car. The stock has just been it was on fire to the upside.
Yeah.
A month ago, like $200. Now it's like $700.
Wow.
It's a
You mean the rental car company?
Yes, the rental car company.
Wow. Okay, so they went from 200 to 700
in weeks, Joel.
Yeah. What do you think what do you think drove the price?
Well, it's a couple of hedge funds that basically own all the shares, and I think they own like 108% of all the shares outstanding, something like that. And obviously, because the reason why it's 108 is the short sellers, and the short sellers have just been getting squeezed like it's nobody's business. There's no funds that support this company. It's maybe worth $50 a share, not 700, not even 200. But this is one of those situations, much GameStop a few years back. You remember that one? And they squeezed the short the short sellers on that. Same thing happened with this here, and if you're not prepared and ready to take a loss, if you've been short this company, for instance, all the way up, you're in a whole world of pain right now. So
I'm pulling this up right now on Yahoo Finance. It says like this Avis short squeeze is real, just like it was last time. So interesting. Yeah. So this is kind of
crazy,
hot off the press right now. Interesting.
I mean, it's unbelievable how many people are going to get hurt on this thing, and you've got to. I guess the story is that you've got to have an exit. You got to have a parachute on, and say you've got to know when to rip cord and say, look, you know what, I'm out, I'm done. I've lost enough money. I'm moving on to the next. Hopefully, I can make some money the next time around.
Yeah. Well, and then I guess after that, is that when you kind of built the platform that you're managing now, or was there kind of a with explosive options, was that kind of the next chapter after building the hedge fund?
Yeah. So after the hedge fund, I went and found a guy who lives in Kentucky, and he was running these services. So we started a couple of them together, and they did really, really well. It's bigtrends.com, and I worked with him for 7 years. And then it was time for me to move out on my own, and I started Exclusive Options in 2011. Got the site going and started writing my articles. Along the way, Joel, I was working with Jim Cramer on money and doing
that's amazing.
The technical off the charts.
What was it? Tell me what it was like working with Jim Cramer.
Jim's great. I mean, it all comes down to sending me an email and say, hey, Bob, got anything interesting this week for Off the Charts? And I said, yeah, sure. Let me write it up. And I just write it up, send it over to him and the writers, and boom, there it is. And then
so he had a separate platform called Off the Charts that was gathering kind of insights, and then would he compensate you for that, or was that just more of like kind of a knowledge sharing
Well, this is
relationship.
part of his television program, Mad Money, and this
Got
is
it.
a segment on Mad Money. So he would mention my name 12, 13, 15 times, mention my company, the book that I wrote, Know Your Options, and that was great advertising for me.
Oh yeah.
I mean, for
what I would say with like being a high performer, it's about, even if it can get boring over time, it's just being the person that just repetitively has the same level of quality, same level of performance for decades. I mean, I used to watch him when I was a kid, maybe 20 years ago. I mean, when I first moved to New York, I had a brief stint on Wall Street on a trading desk as a stockbroker. And everyone would just be reading, we would read Barron's every Sunday, and then we'd have to debrief on Monday. And we would see, Mad Money all the time, just throughout the day. So it's crazy to kind of build. And I think, look, I mean, that has transformed into kind of now, instead of having to be on the TV network, now you can kind of build the same type of experience on short form content on YouTube, and kind of with like the same kind of community and platform that you're building. So, you built like a really great name for yourself, and you also kind of complemented some of these titans. What are some of the things that you've learned from building explosive options and obviously from building community?
Yeah. So, I mean, it's all about learning and about teaching. I love to teach. I love to teach about options because I didn't really have anybody who taught me the ropes and so forth. And I will tell you, Joel, I've just about made every mistake there is. I try to teach everybody what I've done wrong, and hopefully they can sidestep that, because the last thing I want people to do is lose money. It's hard. It's hard to. You start with $100,000 and you lose 50 grand. Yeah. You need 100% return just to get back to even. It's not easy. It's a very difficult environment, and everything. Sure. Every day is a different opportunity. Every day is something different. I know some of the times they rhyme, but they're not identical. And as long as you go in with the notion that I can make some money today if I'm diligent and work hard and keep my risk management rules intact. That's the most important thing. I try to teach everybody to manage risk properly in a very profound way. And I'm constantly reminding people: Are you proper? Are you selling here? Do you have a gain? It's a constant reminder in people's ears, because listen, trading is a lonely business. I'm sitting here at my desk and looking at the wall here. I don't have anybody guiding me or telling me what to do. Most people are in the same spot, so I try to guide them and help them through our chat room to do the same thing.
Sure. And what have you learned, or what advice would you have for someone who's trying to build their own community, whether it's for a certain strategy or just in general getting investors in the room? What are some pieces of advice that you'd have for those people that are looking to maybe raise money or just be with like-minded people?
Sure. I think it's the genuineness that you give to people, the honesty and the willingness to share ideas and your knowledge and and not charge anything for it. Listen, I'm not going to get any points for accumulating all this knowledge when I'm dead and gone and I haven't shared it with anybody. So I think the idea is to try and create a community of people who are interested and take you for who you are. It's the realism of trading and investing. Again, not many of us were reared on Wall Street and really understand the components and what's involved with trading on the street. We're only trading in front of our computers, and this has only been over the last 10, 15 years we've been able to do this. So sure. It's about self-control, discipline, using caution, and if you're able to share what you know with people, you're going to gain some people's allegiance and respect. And if you're showing some genuineness in what you do, that's what matters the most.
Yeah, absolutely. Well, look, I always wrap up every podcast with just one piece of wisdom. I think you've shared a lot of nuggets, but just if you could share one piece of wisdom, it could be from a family member, Could be from your father, could be from one of your previous bosses, it could be someone that you mentor, right? A lot of times we learn from people that are maybe 10 years younger than us, and they just are on top of the trends and the insight. So just maybe one piece of advice for, it could be life advice, it could be professional advice, whatever you got for us.
Yeah. So, there's a lot of people who try to make this transition from the regular working world into trading, and they're not successful doing it. It's because they don't understand the rules. They treat the options market like it's Las Vegas.
Sure.
There's a place, if you want to go to Las Vegas, you can go there and gamble and get drinks. That's not what the options market or the trading market is all about. It's a place where you can, if you're very disciplined, you can make a living doing what you do. So I think it's all about learning, Joel. It's about learning and experimenting and putting yourself on the line in moments where you can be successful. I think trading is very similar to high stakes, no limit poker. Right. There was a guy who won the World Series of Poker back in 2001, Robert Barconi, and they asked him, what makes you so successful in poker in no limit? And he goes, well, it's just the patience, because it's hours and hours of boredom and moments of sheer terror. And that's no different than trading. You look at ideas and you toss them out. You look at ideas all the time, and then there's some lulls in the 6.5 hour trading day where you get bored, and all of a sudden something lights up, and then volatility starts to kick in, and then wow, there's an opportunity there. So if you're prepared and ready for those moments, that's where you're going to be. You're going to show the greatest amount of success. It's not about being perfect. The trading is not about being perfect. Nothing is. But I think what you learn along the way will help you become a better trader and better investor down the road.
Amazing. Well, hey, Bob, really enjoyed all the insight, the storytelling, and compacting all this wisdom in one session. So I'm very confident that our community is going to get a lot of value and just take away a few free nuggets. And look, thanks for all that you do. I'm sure Jim Cramer thanks you, but you're creating impact with the community. You're helping people kind of stay on top of their game. So thanks. Like I said, appreciate all the impact and for spending time with me. Really appreciate it.
Thanks, Joel. Appreciate you spending time with me as well.
All right. Take care. Everybody else, have a great day. All right.